We'll be going over IRS Form 8582, Passive Activity Loss Limitations. So I did this walkthrough a couple years ago before I started using numbers in the form walkthroughs. So I saw in the comments section a request to use actual numbers on this. So this is a pretty significant form. I don't have information to put into all of the parts, but what I will do is I will go over each of the 9 parts and then we'll walk through kind of a case study type scenario. So part 1 is the part of the form where you actually calculate the total passive activity loss, but you do need to complete several parts, specifically parts 4 and 5 before you start on part 1. So as we'll see later, part 4 and part 5 are very similar, except part 4 is a specific carve out for rental real estate activities with active participation. And part of the reason why is because in part 2, you actually will calculate a special allowance for rental real estate activities with active participation. And then everything else that's considered a passive activity loss goes into another section and is not eligible for the special allowance. In part 3, we'll calculate the total losses allowed. Part 4, this is the part where we'll complete the passive activity loss or gain for those special real estate activities with active participation, where you have a special allowance. Part 5 is for the rest of the passive activities without the special allowance. If needed, by that definition, if there's any amount shown in line 9 of part 2, which is this special allowance, then we have to complete part 6 to see how to allocate that special allowance amongst different activities. And then you also have to see if there's any unallowed loss. Part 7 is a calculation of unallowed losses. Part 8 is for allowed losses. And then part 9 is the section where if there are losses reported on 2 or more forms or schedules, then you would complete part 9, basically to maximize or to determine which part of which losses you put into which form or schedule. So this might be something like Schedule E versus Schedule C, or Schedule E versus Schedule F type income, where you have multiple passive activity losses and you're trying to report them on different forms or schedules. So we'll go back up to part 4, and the reason why is because part 1 specifically says to complete part 4 and part 5 and then circle back up here. So in part 4, you're supposed to list all activities with active real estate participation. So in this case, our hero John Doe has 1 passive activity that meets this criteria. Acme Rental Enterprises, they had net income this year of $10,000, no net loss. That would be, if you had a second you could do something like that. That's what it would be. And then you total everything up at the bottom. These are the numbers that you put on lines 1A, 1B, and 1C. So this was this is an unallowed loss carried over from prior years, which you would probably get from part 7 would be the breakdown of or the allocation of unallowed losses. But you would go back to your prior year form 8582 to see what did not care or what you are supposed to carry over from the prior year. And then you do the math over here. This ends up being an overall loss, $10,000. And in part 5, this is basically all other passive activities that don't meet the active participation for rental real estate criteria. So in this case, John Doe has a staging company where he stages rental furniture in support of this home rental business. He made $10,000 and he has $15,000 of prior year unallowed loss. So these numbers will be carried over to lines 2A, 2B, and 2C. And then if you subtract this across the board, you'd get a net loss of $5,000. So we're plugging in the numbers as they appeared in parts 4 and parts 5. Net income $10,000, no net loss, and $20,000 of prior year unallowed losses results in a loss of $10,000. Same situation here, except there's only a $15,000 unallowed loss, so we get $5,000 in line 2D. And then we're going to combine lines 1D and 2D, subtract any prior year unallowed commercial revitalization CRD. So that's the commercial revitalization calculation, which doesn't apply in this case. But there are extra steps that you would have to take if you did commercial revitalization. So in this case, line 1D is a loss and line 3 is a loss. So we're going to go to part 2. Now, if line 1D was a gain or there was no line 1D, then you would skip part 2 and then go basically to part 3. So we have to calculate the special allowance for rental real estate activities with active participation. And it says enter all numbers in part 2 as positive amounts. So the smaller of the loss on 1D or line 3, so that would be this. And again, for people that are literal math aficionados, you would know that a bigger negative number is technically smaller in the math world. That's not the way the IRS sees it for purposes of this worksheet. That's why I entered the loss as a positive number here, because so in other words, just take the absolute value of either lines 3 or 1D and then put the smaller of that number here as a positive number. You'll enter $150,000. If you're married filing separately, you'll enter half of that amount. And then this is a special allowance that's subject to modified adjusted gross income limitations. So we'll just say that John Doe's modified AGI is $100,000. There are special extra steps in the form instructions to help you determine what's modified adjusted gross income in this in this case. You can also check out the additional details in our article. We'll put links in the show notes, but you can also just go to teachmepersonalfinance.com, type in IRS form 8582, and the article should pop right up. So if line 6 is greater than or equal to line 5, that means you are not allowed the special allowance, but in this case it's smaller. So now we get to see if we're eligible for the full amount or some sort of a prorated amount. So we take the difference between the 150 and the 100, that's $50,000. We're going to multiply that by 50%, but not to enter a number more than $25,000. What that means is that's the maximum special allowance for passive activity losses that you can take for real estate activities with active participation. So we'll take the smaller of that since the actual loss was only $10,000. And then now we're going to add the income amounts from lines 1A, which is $10,000, and lines, That was easier to get to, but really we're talking about line 1A and 2A up here. So they're the same figures because we did carry them over from parts 4 or 5. But 10,000 and 10,000, that gives us $20,000. And then we're going to add lines 9 and 10. And that's the amount of total losses that we're allowed to take on our tax return. So if you remember, generally speaking, passive activity losses can only offset the amount of passive activity income. That's where this figure comes in. Plus, you get the special allowance each year for rental real estate activities with active participation. And the IRS has a very specific definition of active participation. So check out our article if you need more. So we already completed parts 4 and 5. We're going to go drop down here because there was a number in line 9 in part 2. And so this is Acme Rental Enterprises. That's here. Everything is going to be on Schedule E, which is our loss of $10,000, special allowance $10,000. So there were no unallowed losses here. But if there were, that's what Part 7 is for. Part 8 would differentiate the allowed losses. And then Part 9 would be reporting activities with losses on 2 or more forms or schedules. So again, that's outside the scope of this example. Perhaps in a future video, we'll circle back to that kind of a situation. So again, this is how we would complete IRS Form 8582. It is a complex form, but it is important to make sure that you are not trying to take too much of a tax deduction for passive activities. So it is important to get this right. But I think that kind of does it for our video here. If you want to go step by step, again, check out our article. We'll put the link in the show notes. But any tax form, you can go to our website and then you can search the tax form number. If we've created an article on it, it will pop up in the search results. So we'll also put links to forms and schedules that we either mention in our article or mention in this video, or that might be pertinent to your tax situation as you navigate this form. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, or if there's a topic that you would like to see covered in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.